Scope 3 emissions reporting is coming, and a lot of Australian businesses aren't ready. Here's the thing, if your business is in a supply chain, Scope 3 emissions reporting could affect you sooner than you think. In the next couple of minutes, I'll explain what Scope 3 emissions reporting is, why large companies are suddenly asking their suppliers for emissions data, and how small and medium businesses can start preparing now. And later, I'll show you a simple way to start tracking the information you'll likely need without turning it into a massive project. So first, what are Scope 3 emissions? In Australia, greenhouse gas emissions are generally divided into three categories. Scope 1 emissions are the direct emissions from your business, things like fuel used in company vehicles or equipment. Scope 2 emissions are the emissions from electricity you purchase, but Scope 3 emissions are different. Scope 3 emissions are the indirect emissions that happen across your entire value chain, things like suppliers, transport, business travel. It's also waste and even how customers use your products. Now, here is why all of this really matters for your business. Large Australian companies are starting to report climate information under new sustainability disclosure rules. And when they report their Scope 3 emissions, they often need information from their smaller suppliers. So if you run a small or medium business, you might suddenly receive a request asking about your emissions data. Now, here's the challenge. Many businesses haven't started collecting this information yet. But the good news is, preparing for Scope 3 emissions reporting doesn't have to be complicated. Step 1, understand your biggest emission sources. For many small businesses, this might include fuel used in vehicles and electricity consumption, freight and transport, materials or products you purchase, and business travel. Step 2, start tracking basic data. Things like fuel invoices, electricity usage, freight distances, and supplier information are often the starting point for emissions estimates. The Australian government publishes national greenhouse accounts factors, which businesses use to convert this activity data into estimated emissions. Now, here's a quick example. One business we spoke with supplies components to a large construction company. They suddenly received a supplier questionnaire asking about their carbon footprint. At first, they thought it was incredibly technical. But once they looked closer, the company was really just asking for information. The business already had fuel usage, electricity bills, and transport distances. So the problem felt overwhelming, but the data already existed. So once they organized their records, answering the request became much easier. And don't forget, this trend is growing quickly as climate reporting requirements expand globally. So learning how to prepare for Scope 3 emissions reporting now can help your business stay competitive and keep working with larger organizations. As always, this video is general information only. Every business situation is different. If you're one of our clients and you're starting to receive sustainability or emissions reporting requests, feel free to raise it in our next complimentary tax time meeting, or arrange a time to discuss how this could affect your business. If you found this helpful, don't forget to like the video, subscribe to the channel, and share it with another business owner who might soon be asked about Scope 3 emissions reporting. Thanks for watching, and I'll see you next time.